Welcome to Impact Investing. I'm your host, Jeffrey J.P. Potvin, and today we're deep diving with Juho Risku, co-founder and partner of Butterfly Ventures, a leading Nordic deep tech venture capital firm. A serial entrepreneur since the mid-'80s, Juho has been transforming the startup ecosystem with laser focus on impactful innovations. Butterfly Ventures manages a $77 million fund, investing in 10 companies annually and pioneering a new approach to venture capital that prioritizes sustainability and technology breakthroughs. We're so excited to have you on the show today. Welcome.
Thanks a lot. Super nice to be here.
Well, there's lots of great things, and the reason why I'm always excited to get on a call and be able to interview investors. But when you're an impact investor and you've done all these great things, you've been in the ecosystem for such a long time, not only as a founder, but obviously on the venture side, and you've done a lot of great things. So I'll say the last decade plus. So we're going to be excited to deep dive into a lot of these things. But the way we like to start our show off is we want to learn a bit more about yourself. But before we learn about you, maybe you can share one thing about you that nobody would know, and then we'll deep dive in and we'll go back to some of these crazy stories back in your uni days all the way up. But one thing about you that nobody would know.
The thing that nobody will know, that's a tough one because I've been quite open on all of the stuff that, I've been around like messing up ton of things and, so forth. But, well, perhaps one of the less known things might be that I cry quite easily on movies or whenever I kind of read a touching novel or something, and I don't know what it tells about me or anything, or or the other thing that I could cook decent risotto. Again, maybe not so well known in business circles, but my family of course knows.
No, that's great. And it's a great share. And I think today people are becoming a lot more familiarized with themselves. And I think I guess the sensitive or empathetic personalities are starting to be able to be looked at as being a good thing, a good sign of leadership and being able to understand, control, and manage things a little bit differently. So you're starting to see that a lot more. And I think that that's pretty powerful to be able to share that and be able to come out and say, hey, you know what, this is how I operate. And some things, they give me a little bit more emotion than others, but you know what, I'm still there and I'm part of the game, and let's keep going.
Yeah, yeah, indeed, and I mean, it's not I don't consider it a kind of a it just kind of my personality. I kind of have a good imagination, and somehow kind of that leads me to kind of think of how did would the person in the story feel, or something like that. So maybe that's the kind of imagination which kind of brings it along.
Agreed. And I think, as we all progress as humans, we have to find ways that kind of make ourselves a little bit more unique and different, but also be ourselves. And, being empathetic and emotional and all those things are all part of being human. So I guess it's dropping the barriers and moving forward. So I love that. Well, I guess as we start to, before we get to break down, and I got so many questions I want to ask and dive into, maybe you can share a little bit more on your background and all of the great things that you've done and what got you here today. And of course, I'd love for you to kind of emphasize and what has been great about everything that I've learned about yourself is that you have no fear of sharing the faults and the crazy things that have happened that have got you where you are. And I think a lot of people have that fear that they can't share, I made this mistake or this big mistake. And I know that you kind of relish off that because you're like, hey, I wouldn't be here if I didn't share the things I went through. And that's what's kind of helps other entrepreneurs move forward. So I'm excited to learn more about that, but I turn it over to you.
Sure, sure. I mean, sort of this path started some mid 80s, not really as an entrepreneur yet, but got my first computer and started doing stuff. And those days, I mean, I was the unlucky one that got the PC and not the kind of a Commodore 64. So I didn't have games. I had to start programming a little bit, and that's how kind of things started. But the next maybe the big thing was that somewhere early 90s I got a little bit involved in the demo scene. Not really, I was never that good of a programmer, but I was part of one group that and doing their kind of public relations part, and running the bulletin board system was their kind of official bulletin board system. And in somewhere around 94ish, when I got to uni, there was a kind of a lucky coincidence that our uni offered such kind of rooms where we had a kind of a fast internet connection, and we did with one US dude a integration of a this kind of an old-fashioned bulletin board system and the internet, and not really, again, still not an entrepreneur really, but on that path. And around 96, being bored at the summer job in one large oil facility, I started kind of building websites because there was a kind of a lots of screen time waiting and waiting and waiting what happens. So and then we started the company summer 96 with some of my friends, uh, and that's how I became an entrepreneur. And long story short, we started from the kind of a very difficult end of the web, like doing quite as early as Netscape 2 came out, doing kind of this websites that were back loading data on the background and windowing and that sort of stuff. And it was damn difficult to do such a user experience. And that led a few inventions, and the second startup to be spun off. I mean, we started doing that stuff already somewhere 98 or something, along the same time when I dropped off from the process engineering department at the uni. Just kind of a too much work to do at the company. But nevertheless, yeah, around 98, we started doing these modern websites, and around 2004ish, spun off a company that eventually got a little bit of VC money. We run a small operation in Silicon Valley, and that's how I got the kind of into VC scene from the kind of entrepreneurial side. Not a huge success. I mean, I sold my shares and got enough money to go back to the uni, not to process engineering, but leadership management, and but nevertheless, it was a kind of a good ride. I learned a ton, uh, wrecked a few balls on the. For example, one big conference, I had this presentation in front of thousands of people, TV cameras, everything, and it just didn't work. 5 point hint: don't do live programming on live. Yeah, but yeah, around 2007ish, back to uni. Graduated quite quickly after that from the management side. Did my master's thesis from the founder entrepreneur VC capitalist relationships. There was one more startup, and since 2012 I've been a full-time VC. Started from a small fund, kind of at the first couple were on the 15 million side. The latest one is a 50 million one. So that's the kind of where we are at right now. Over the years, our team has invested up to close to 100 companies. So always on kind of a seed side. So early on, early companies. But yeah, I think we have a pretty good footprint over here, and that's been an interesting journey.
No, I love that, and I'll kind of try to unpack some of this. But you shared when you started to work on these websites and doing things in the university world, and then you started to kind of get bored and expand outside of that, and started to do these yourself. And back in the early late '90s, early 2000s, building websites was like you know 80, 100, 200, $300,000 for these small sites. They were very complicated because there wasn't a lot of well-built code. There was a lot of things that just didn't function and operate, and some of it was dial-up. Like there was a lot of other things.
All of the browsers were different. You had to program for each and every browser kind of a different code base, and so forth. So yeah.
It became quite trying. So, is there, I think from there today, people will say it's so easy to build a company today than it was, back 20 years ago. Is there some learnings that you took from your first company? You mentioned you raised some money eventually on a side business that you created. Is there some learnings that you kind of pass through today to founders that you say, no, here's 5 things keep in mind they happen everywhere all the time. Doesn't matter if it was 20 years ago to today. These are 5 things that I always try to earmark for startups because it's really important to pay attention to these things when you start.
Well, what I usually start, that applies also the kind of a lecture that I have on local university here, is that it does. I mean, everybody does mistakes. Mistakes are okay. What matters is kind of the rate of learning, how much learning you can pull out of a mistake. So that's one of the kind of I guess key takeaways, and for me, it's in a way easier kind of live with the made up with the decisions that I've made than have lots of unmade decisions. And I think this kind of a thing applies quite a bit of a bit to the sort of a to running a company as well. The other really big thing is that trust matters a lot in any kind of a relationship, whether it's a business relationship or whether it's a relationship between the entrepreneur and VC, or whatever. In startup, it makes all the difference how quickly you can make the decisions, how much kind of a backing you have from your kind of a VCs, as well as uh, what's the kind of a quality of collaboration, all in all. It makes everything so much more effective if there's a kind of a this kind of a open communication and good trust around. And that was actually one of the key outcomes of the thesis that I did. That the trust really spins and makes also the kind of a profits emerge, so to say. So I don't know. Those are at least those two things I could kind of pull out. Then there are tons of, like, you shouldn't spend third of the money you raised into a big party. I did that, so not recommended.
Well, you know what? I guess you still create the memories, so I guess that's a good thing. But yeah, it doesn't sound like it's going to be beneficial to the business in the long run. But to take some of the points that you shared, which I really like, they really fall under this term that bounces around inside my head a lot recently, and probably for a long time, is leadership. And I know this is also something that's quite dear to yourself, is how do we help early stage companies work their way through their business, the ecosystem, but doing it with proper leadership and learning what leadership is and how does it represent the business. And you kind of talked about that by clear communications, collaboration, transparency, trust. Trust is a big one. And maybe if you take leadership and trust, you can define what that actually means, because I think trust is this open blanketed word that people throw around, like maybe like love. Oh, I love this. Oh, I love that. And maybe it loses its real true meaning. But is trust the same? Because through all of the companies that we work with, invest in, the trust seems to be on the bottom level of anything that goes on. And it's everybody is very untrustworthy. They're limited on communication. How do you start to get people to really start to open this up? Because I think you just shared it, that success comes from collaboration, it comes from these elements, but they're also the ones that are the most feared. And is that because you have bad players in VC or bad player investors? What is the real reason that you're seeing this not being pushed to the top?
Yeah, so it was about the kind of this trust, and what makes it kind of why it's important, why it's difficult. The open, yeah, okay, yeah. So I kind of think that the trust is a little bit difficult topic, because it's not always easy to be a kind of a open and tell also the bad stuff. And particularly, there's a little bit of a kind of a the kind of a bad news, because people tend to kind of react to bad news in a bad way. And so it's kind of this dynamic. And trust takes a long time to kind of build. So you have to kind of have this kind of this feel that you actually connect with the person, and you have to kind of have this I mean, it comes from the example, it comes from the kind of a previous experiences, and it's not something that happens overnight. And I guess that's the kind of that's the difficulty, that it takes time to build and develop. and that people don't realize how important it is, even though instinctively we do realize on our personal relationships that, but for some reason people don't translate those kind of best practices that they kind of think of their, what they expect around their kind of loved ones and the people around them to sort of apply also in the business world. And I guess that's the difficulty part in the beginning. All in all, once you get it going, you kind of establish the trust. I think it's actually fairly easy. Sort of common practices, and usually, I think that investors are happier if they kind of hear also the bad news up front than if they are kind of hidden and they are revealed after kind of lots of time and hurdles. I mean, when you know you can react, when you know you can kind of help out. So I don't know.
So do you feel that there's a bigger tie-in that you have to work closer to the founders to build that trust link because you have experience as a founder, you've gone through a lot of these pain points. Do you think that that's the first step in the door to open them up? It's early, your first money in typically, so your seed stage, so they're already just trying to find their way. Is it kind of that, and you're not going to be able to get them if you're not an accelerator? How do you really get in front of them on a daily basis so that they feel comfortable enough to open up and share? What are kind of some of the tactics that you do to enable these founders to want to share the bad news? Because it's quite common. Most people on social media, they're not saying, had a terrible day today, lost my lunch, had my mobile phone stolen. And then every day is like that. People be like, this person's a Debbie Downer, don't want to talk to them. They're not going to bring any value to my life, even though that stuff is warranted and it's valuable to learn. But we all hide things that are negative. Hey, I failed my exam today. I'm going to have to repeat grade 12. Whatever the thing is, nobody wants to share that information because it's demoralizing to the person, but also to everybody else. So how do you get founders to sit there and say, you know what, today I need to share this information because if it gets out to my other investors um, without me telling them, they're going to be upset because they're thinking their company's failing. Or if I go to the investors and tell them this is going on, maybe I can shape my mind around the fact that they might be able to help me.
Well, we try to kind of show example. So we don't play games with the kind of shareholders agreements or the kind of shareholder agreement terms, for example. I mean, we use standard DC terms, but we try to write them in a way that the founder understands why they are there. Our term sheet template has this kind of little balloons on the side that explains where we come from kind of their point of view, and usually kind of for example, understanding why good leaver bad leaver provisions actually are a benefit of a company. you know I mean, founders don't mind, and I think this kind of a trustworthy kind of a that you don't try to hide valuation affecting things into small print, but you talk about openly. Okay, we have if we have a liquidation preference, what does it mean? How does it work? Or if there is uh, let's say standard terms like tracker loans, stacker loans, how do they actually work, and what kind of a power balance there actually is? Why founders are important? Usually, also in the exit, I mean, in many cases, uh, founders are one of the main sort of assets if you can allow the call that way, so that it would be really, despite whatever shareholders agreement says, it would be really difficult to do something like an exit without the kind of a being in agreement with the founders. So having a little bit of a discussion, being an open about it.
You're basically leading the way by being very transparent. And if you're transparent, you're hoping that this will lead them to feel the same way. Fair to say?
Exactly. That's one of the things. All in all, I believe in kind of a this kind of a frontline leading attitude, which means that if you want others to be open and transparent, you have to start by yourself.
And that's very valid, and it obviously makes a lot of sense. And I guess along the way, it coaches people into also believing that they should be more upfront. I'm guessing in that case, you probably tie in a lot of your own investors and research into that to help them. So once they do come up with openness, you're able to share that. So that kind of gets shared around as well. That you're very functional at helping these companies when they are in difficult times. So more have an interest to reach out and be supported that way.
Yeah, that's 100% true. So we get quite a bit of deal flow as a referrals from our founder network. Actually, I'm quite proud of the fact that a handful of former founders are investors in our latest fund as well. So they made some money so that they can invest, and at the same time, they feel that we did our work reasonably well, I guess.
Oh, that's great. That speaks volumes, right? When your founders come back and you supported them and they want to support you in that forward push as well, and they appreciate kind of the style or the way your transparency opened up. Now, taking some of the mistakes that you felt you made and what you try to again impose and help the founders with, are there any that kind of stand out that you felt that you made the outside of the party? Because obviously you felt that wasn't really the beneficial to the company. But were there any things around legal, financial, operations, things that you start to kind of share a bit more because it bothered you that you did them, and you obviously you can relate to a founder because you have the experience, which I think is key for any investor to have. It makes a lot of value back. Is there any that kind of stand out for you that you really tried to impose on the founders to kind of stay clear of? If that is, don't work with founders that are doing X. Don't put money into something before you have an outcome. Like, are there things that you kind of steer people a little bit better with because you see them happening all the time within founder circles?
I guess there are a couple of them that they kind of relate to also kind of things that we did not necessarily right, like premature scale up of the kind of a cost basis, kind of typical mistake that founders do. People think that they have a product market fit, and then they kind of think that it's also sales ready, which is usually a little bit different than being sales ready and having a kind of a early product market fit, meaning that you also would have to have a replicatable sales process to be able to hire and scale sales teams. And until you have the sales process, it's usually very difficult, even with lots of money, to scale. You need to figure it out how to kind of scale, not just the kind of product wise, but also the kind of a sales process wise. The other thing is that early on we were hiring our kind of a US head of sales, and I had this funny feeling that this is not the right guy, and I was a little bit kind of uncertain of myself. So I had a US CEO running the US side of the show, and we had a kind of a VC, and both of them were kind of a very strongly saying that okay, this is how the US sales guys are, and for some reason I didn't dare to voice up this funny feeling that I have had that this guy is not the right one. And there was a little bit of a mismatch because the market was changing. We were changing the kind of from a license model to a software, this open source model, and so forth. And of course, all of these other people didn't know the things as well as they did, as I did. And it was really big mistake that I didn't kind of dare to say that I don't know why, but this doesn't feel right, and we didn't have a kind of a long enough discussion. I'm pretty sure that the reason would have come out if and the people around me would have listened to me if I would have kind of just been more kind of open about this funny feeling that I had. And it's not just the kind of hiding the facts, but also about those things that you feel that you need to discuss. That, in my opinion, is part of this openness.
I like that. That one's that's brilliant. Yeah, it's not showing no fear, but almost showing no fear. But it's also understanding your own gut and understanding your own feelings again, and being able to action them. Does this maybe in a way have you think that you should share to these companies if they're at the stage of scale up or they're finding market fit, that you recommend that they start working with a coach or work with someone that they can start to share these things to, so that they're being empowered by that person to say, hey, you know what, go to your team and tell them I'm not feeling this, because maybe they're just internalizing it too much, as to your point. And if they had someone punching them along a little bit and driving them and building confidence into them, maybe that would be something that would be helpful. Is that something that might be a way to make this work better and faster? And
Well, I'm honestly speaking, don't know. I mean, we've used this kind of similar type of method that some software companies run their agile software development projects, like this Scrum type of a methodology. So our ideology has been that we meet a bit more often than a normal board work would kind of mean. So every 2 to 3 weeks, particularly in the early on, we meet very often, every 2 to 3 weeks, and we try to kind of discuss of those frontline matters, like what they are working, what did they do during the last sprint, what they're planning to do next sprint. And this has been quite a good way to kind of build the relationship, and for us to learn, who are these guys, how they do stuff. And because it's not a formal board meeting, it also means that people open up a little more. It's less formal. And I guess that kind of approach, where you have someone that with whom you can have a kind of regular discussions, what's on your mind, might help quite a bit, whether it's a coach or whether it's a VC. I mean, we are usually pretty busy, so it's difficult to count that you get the kind of a bandwidth always from a, unfortunately, from a investor, particularly a kind of a early stage investor who typically have a pretty large portfolio compared to number of people that are running the fund. But yeah, we always try to kind of help also in this kind of a way that we try to keep the barrier of approaching us after the investment relatively low.
this is brilliant. I love this, because you're turning this into a relationship, which creates an open-ended position for those founders to feel more comfortable throughout the process. And let's say that, as you mentioned, you're a seed investor, so you've got them for, say, 2 years. And in that 2 years, you can really shift and build this company by enabling that founder to find a comfort spot with you guys. Instead of meeting on a quarterly basis, you're meeting on a bi-weekly or bi-monthly basis. So you've actually sped up the timing that you're meeting. They're becoming more comfortable with you. By the end of year two, they will be sharing everything. So that hopefully transfers into the next round of funding with the next group, that they're going to want to make sure they're reaching out and having those conversations, but they're at least comfortable now that they've got to share the pain points, the emotional side of it. So they're opening those pieces up, which allows you to see things a lot clearer and also be able to figure out which pieces you can help with. So in a way, it's still coaching it, but it's allowing them to be transparent and open because they're in the thick of it. And you guys are kind of working alongside of that, which is quarterbacking the process and making them the most important piece in the room, which I think is awesome.
Yeah. That kind of a coaching approach. All in all, I mean, even in general leadership, I think the leaders should be more of a coaches than people who give dictates. So as a CEO, I think the one of the most important things is that the job of the CEO is to enable everybody else to do their job. And if it means that you have to go and fetch the toilet paper, CEO does that if necessary. I mean, of course, I don't mean that CEO should be in such a kind of a position but he needs to make sure that that gets done. Anything that kind of pushes the business forward, it's the responsibility of CEO, and that's the kind of a little bit of a service attitude. What I kind of think of being a good CEO and being a good leader in general. I know it's maybe a bit controversial for some people, but I think leadership is a service business.
I love that. You're a term I like to use is you're creating little mini CEOs. If you allow everybody to be enabled, they're all CEOs. So how do you enable everybody to be impactful and to make these changes? And it sounds like the way you're building this and operating with these founders, you're working alongside them and you're building leaders. And I think that is huge. Is there something that you look for then when you're talking to founders and you're going to make an investment? Is it standing out to you? Does this person look like a leader I can work with? And is this person going to lead a company? And have you decided this isn't going to work? This person doesn't have the leadership skills. It's going to be too much work. I have no interest in this. I get the product's great, but we'll never get inside of this business and be able to work with them.
Yeah, that's another kind of a difficult question. I mean, it's always kind of a mixture of people and the kind of a product and all of those things that make a good startup. But people is definitely very important. I tend to kind of a look for those more of the kind of a growth opportunity. So I don't think that the people, particularly in the seed stage, people often aren't ready on sort of every single aspect of life. Uh, I mean, of course, if you're a serial entrepreneur, and of course, serial entrepreneurship kind of shows, and that makes kind of a good starting point to start a startup. But not all startups are like that. And then you need to kind of start looking at the growth potential in the team, their team dynamics. I think team dynamics actually is a very important thing, and that's why we usually want to see the team in not just the kind of when they present the case to us, but also in this kind of a sprint meetings after we've invested, so that we can a little bit kind of get the feel of their team dynamics and sometimes even help on those questions.
I like that. And if I take this leadership as being the encompass to how you guys invest and how you operate and what you focus on to make your business stand out amongst the rest that you're not investing in, how much is that leadership skills that come from your building companies on your side, building a venture firm, but also now I'm going to tie in the mountain climbing side. Mountain climbing sounds like it plays a big part in this because it's a high challenge, it's collaboration, it's team effort. You're risking everything going up a mountain, especially if it's snow covered or whatever it might be. There's so many more challenges in there, and you need a leader. There is one person that's driving the ship when you're moving forward. So everybody becomes their own little mini leader, but you're learning from the person in front of you, because if that person screws up, it affects everybody down the chain, especially in a high risk environment. So are you taking from that? And I don't think this is a far stretch, because I'm also a climber and I've climbed many mountains, and I believe, well, many, I'd say a dozen. But the point is that I love that aspect, but there's always leaders that you're putting your life on the line with, and you're doing everything to get to that top. So do you think that some of that transparency from that is also sharing your experience with the founders that you're working with?
I guess I mean climbing is good in a way that it definitely endorses the both the kind of a natural leadership as well as this kind of trust. I mean, you don't get to a life-threatening situation with someone that you don't trust. So by nature, you are with people that trust, and by nature, you kind of behave in a way that it kind of adds to that trust, a bucket of trust. So in a way, climbing, I think it has lots of good qualities. What comes to kind of leadership and life in general. But I don't know. I mean, well, okay, startup is a high risk environment as well. For me, climbing though is a lot more like it's really something that is serious enough that I cannot focus on everything else. So on the mountain, you don't have to think about work. The feedback loop is relatively short, a lot less abstract than working in a VC, where after 10 years if the fund went well or not, type of thing. So I got a little bit maybe scattered here.
No, but to your point, there is always crossover from the learnings we take, and when I look at, say, experiences that when I climbed in um, different mountains, of course, and I look at the experience I had, I was with people that I've known for 2 days, climbing a mountain. So you put a lot of trust in that experience. Stuck in a snowstorm at 6,000 meters above sea level, and you can't see an inch in front of your face, and you're not tethered at this point. You can't see your markers, and you're on the side of a face of a mountain, and you're deciding, what do I do next? Do I keep going to peak, or do I decide that I got to pause and make a turn around, and all of a sudden you're on the other side of the mountain and you're completely lost because it's pitch black. So the trust factor comes in there, the learning and working with your teams, and maybe that's just that environment and it's only 3 days. But then take how you work with startups and how they operate. They're working in sprints, as you mentioned, and it's short sprints. They're going fast and they're trying to fail hard or take that in and grow. So to your point, there's a lot of learnings on all sides, and you kind of have to be transparent to push those through. And it's up to those founders on how they're going to embrace that change or embrace that challenge.
Yeah. And also kind of about the difficult stuff, like, it doesn't work at the mountain if you sort of lie that you have water left and you don't. And the same thing. I mean, that's why we try to be transparent to entrepreneurs. Also, when it seems that we are not going to invest further, so that they know where they stand, what's the kind of a ground they stand for. That sometimes happens, but it definitely goes kind of both ways, and in that way, like, this kind of a tough situation definitely instills the kind of qualities that are required for the to trust to kind of be there. So yeah.
No, I like that. Now, as you've kind of been working with your founders, your businesses, you've made significant amount of investments, over 100 over time. And as much as I would love to get into ratios and numbers and how those all function inside of your fund, some of the things that you've done that have made a big impact in Europe is that you're driving carbon neutral businesses, you're investing, impact investing. And one of the things that really caught my eye was that from utilizing Article 8, you guys are pretty much sitting in this, call it the light green zone. So you're focusing on impact, you're trying to make that change, you're investing this way. What was the reason that you guys chose to do this? Because you're kind of a pioneer in it. You're starting something that was relatively not being touched. Of course, there's other layers of this. You get into full impact at Article 9, and then there's the standards. Where do you guys see yourself going to in the future, and how have you felt that it's worked today in how you guys have been investing in this impact area?
So kind of a becoming an Article 8 fund was sort of easy for us. I mean, we've always been a little bit bright-eyed, blue-eyed, in a sense of what kind of things we like to do, and it little bit stemmed from the fact that I believe that kind of a money is just a kind of a abstraction value, and value and IRRs follow kind of quite closely. And at the moment, to me, it seems that okay, there are of course times when the kind of it's a little bit unclear where the value is from the society point of view. But at the moment, to me, it seems that world is becoming a little bit more transparent. It's a little bit more easy to kind of find the information. Who's the bad guy, who's the good guy, and that will mean eventually that the real value, that value that there is something has a value for a society, translates to money. And in that sense, the idea of being a impact investor or having a sustainability angle in the fund was quite easy. Besides, looking at the portfolio, looking at the companies that we've invested in, very large chunk already kind of a prior funds that were not Article 8 funds. Very many of those companies were having a kind of a tangible impact, and we kind of realized that we are more or less there, and we wanted to kind of do our bit on the whether it's a climate change or rest of the environment or a social side of the equation. So I think there's a lots of money to be made because there's a lots of value to be made. So I for us it was quite easy.
Well, I like the fact that you've you shaped your model and your business around this, and you invested in a lot of great companies, and of course, interesting ones, and from climate, battery, you name it, a lot of energy, a lot of these different sectors, which I think is phenomenal. And there was a couple of lines that I will explore before we dive into the 60-second spot. And one of them was the art of being a good human. And I think that this goes back to trust. It goes back to communications. It goes back to driving out sustainability, ethics. So I wonder if this is your tagline. It should almost be this across all of your pages, because I love that part that you're taking that stance, and it makes a big difference. And you could almost layer in the next line, which is changing the world. And that if you're a good human, like you just said, it's not about the money. It's not about the money you make. It's about how you're empowering other people to build success, and they're going to be good people for it, and they're going to change the world. And those are the types of people you're looking for. Is that kind of a mantra? Is that kind of the structure behind it?
I'd say that's kind of at least my personal kind of a mantra and personal kind of a ethos. Sort of the reason why I'm in VC, I feel that this is a kind of a place where I can make an effect in the world. This being said, I think the situation a little bit similar. Like if there is a company that does good products, the money will follow. I mean, it's a little bit say like same thing, that if there is a kind of a you do good stuff, the money and IRS follow. And I mean, for me, it's not too kind of a it's kind of more or less clear. I'm just happy that I mean, I'm not great fan of this, all of these standards and reporting, and what comes to with the kind of a sustainable investing these days. But I understand the need, and that is that people start to pay more attention to the kind of things if it's not kind of somehow in their heart already. It's this transparency of, in a way, it's transparency of value type of a question.
Agreed. But if you have that ethos and those ethics, I think that those are mandates that you hang by. Hopefully, over time, you remove the bad players or the ones that are kind of causing the problem in the industry. That you have to create standards in order for everybody to not play on the outside of the standard. So I guess that is a good thing. If we didn't have bad players, we would all be working on the same great quality standards. But you create standards to ensure that the people don't come in and abuse it, right? Greenwashing and everything else. So I think it's kind of part and parcel to the space you're in. And hopefully the people that we do cross always are the good people that want to build and support the network and the growth of these types of companies. So, and there is always a win at the end, of course, that we'll all look for, because we all report to someone too.
Yeah, yeah. But I mean, we've done reasonably well. There's one unicorn and you know bunch of good exits. So I think it's relatively well validated as well. It's not just the kind of wishful thinking.
I love it. I love it. Well, we're going to move into the next part, and this is the 60-second rant. So, the way this works is you have 60 seconds to rant about anything that you think drives you crazy in the space or world. And I will try my best to rebuttal, but I'll probably share that 98% of the time I am all supportive of the rant. So, it's very hard to rebuttal against what people are fighting against. I'll start the clock. Keep in mind, nobody's ever made 60 seconds, so fire away when you're ready.
Okay. So what I don't like, I really don't like how the loudest opinion these days is kind of replaced. It has replaced the proper discussion and the kind of facts, particularly in public discourse, but elsewhere in the society. And the fact that there's not enough curiosity and will to understand the other side, and as a result, these people are kind of just pushing their agenda and only their agenda. It's been kind of recent years. World has gotten kind of a way too saturated of these kind of loud opinions. That's bugs me really a lot. Like, and somehow that has made us in these virtual factions. We are kind of in these small bubbles, and I don't know. And yet, at the same time, we talk lots about the collaboration, the importance of a collaboration, and in that collaboration, it's important to understand the other side, so that you can actually kind of work together and be effective working together. And this kind of attitude really, really bugs me off. I'm pretty sure that with the better collaboration, with a little bit listening, a little bit kind of understanding, and we would do a couple of GDP points better than we're doing right now.
I love that. That's a great rant, and I'm not gonna counter again. I can't. But I want to support it because I 100% agree with you. But I do think that you kind of blended both sides, which I really like. So there is the agonist antagonist side to this. The loudest spoken or the screamer tends to be not always correct, but the pendulum swings far at that point, and there's too many people call it the sheep are going after the loud voice because they see the opportunity or they see the money. And I think that to your point, there needs to be a lot more conversation taking from the loud point, because there is a middle ground to that, which means that it's not exactly what they're saying, but it's close, that there's going to be some value if we take the time to pay attention to it and come up in the middle, we'll get somewhere. And I think that's where the logic has to change, is that the loudest spoken doesn't mean it's the word and it's the direction. It just means that they're somewhat right, and we have to figure out what that somewhat is so that we can move the needle and move ourselves into a better direction, because there is a problem, and it just happens that the loudest spoken person dominates the room or dominates the story, but that isn't always the correct direction. It's what is the in between, and how do we decipher that?
Yeah, indeed, and the kind of a little bit more understanding into the mix, and will to understand a little bit more work in this willingness to understand, and I think people would do a lot better decisions.
Agreed. There's always a lot of opinions, and it's how do you decipher between all the opinions and take some facts and tie it into a very knitted story so that we get a better outcome in the final part of it. Okay, so now we're going to move into our segment, which is you're going to choose one versus the other as the early investors. So rapid fire questions, one versus the other. When you're making investments, do you choose to go with a founder or co-founder?
I mean, it's hard to say not to say a founder.
Okay, well, it's one or the other. You can have two founders, two co-founders, or you have a founder. So I guess it's if founder is the
Yeah,
one, that's
exactly.
good.
That's the kind of a thing.
Okay, unicorn or 4 year 10x exit.
Personally, I'm for the unicorns. My colleagues, settle me down time to time.
Fair. AI or blockchain?
AI for sure.
First money in or Series A?
First money in.
Board seat or observer?
Board seat.
Okay. Safe or convertible note?
Convertible note.
Lead or follow?
Lead.
Love it. Two qualities for a startup to stand out to you.
Extraordinary team, including the team dynamics, and I mean, everybody loves large market sizes, but honestly, I like good products. I'm unusually product person. I like to understand the product and the capabilities of the product.
Okay. Verticals of focus?
We invest across the spectrum. It's more about the stage, Nordics and Baltics, as well as that there should be a kind of a science-driven, deep tech type of core in the company.
Okay. Number of companies invested per year?
Roughly 10 new companies a year.
Love it. Favorite part of investing?
I really like the first few sprints that we do. Typically, it's very kind of exciting and very kind of right after we've done the investment. That's a good part. But another good part is that kind of a meeting the I mean, in general in VC, the best part is to kind of meet bright minds and always learn something. So
Agreed. Toughest lesson you've learned as an investor?
toughest lesson. Maybe it is that deal is not done until it's done. No.
They can slip away, that's for sure.
Yeah, and also on the exit side, they can slip away.
That happens too often, I agree. What is the piece of advice you give founders 9 out of 10 times?
I think I mentioned this kind of a that be honest.
I love it. Who is your hero, mentor, and why?
Okay, and now we are on a name question. Unfortunately, I'm this person who cannot remember names, so I skip this one. Sorry.
Nope, that's okay. That's okay. Um, what was your favorite investment and what was your worst investment? And you don't have to name names, just examples.
Well, have to say that this goes again, not necessarily always with the kind of amount of money made, but the favorite one is a one certain that has a super kind of smart founders that are kind of I mean, it's amazing to be with people that are so much smarter than I. Like it's yeah, this they're working with some battery chemistry, so that's a I've always enjoyed the founder team there. And the worst one, maybe there was it was actually a pretty good idea, and they got a pretty good start, but they quit at the kind of a first difficulties when the things started didn't start go the right direction, and when they would have to had a kind of a stretch a little bit before the next round, the people sort of quit, and that kind of felt really bad. That it almost felt that they didn't really start being entrepreneurs yet.
Fair. Yeah, that's a tough one if you bounce out way too early when you've got a high mountain to climb.
Yeah.
Okay, we're going to go to the personal side. Favorite movie and what character would you play?
Uh, I don't have a TV, and I'm not so much into the kind of a popular culture in general. Maybe the ones of that I've seen last one, the this sci-fi. Let me think. Dune trilogy comes to my mind, but can't name the actors there.
No, that's great. Agreed. Favorite book?
Depends on if it's on the kind of a work side or kind of a personal work side. Probably would be Taleb's Black Swan and the other two books about the kind of a Black Swan, or Gusley's Courage. And on novels, maybe Master and Margarita by Bulgakov or Silk by Alessandro Barrico. Uh, Both are very. I like the language, how the kind of flows. There's a melody in there, so
I love it. That's awesome. All right, cool. Favorite sports team?
I don't have a sports team. I'm a this okay small team individual climber type of thing. So no.
Perfect. No, that's cool. Cake or fortune cookie?
Fortune cookie,
DC or Marvel?
maybe DC,
All right. Superman or Batman?
Batman.
Football or football?
You mean European football? Football. Probably European football, but again, I was so bad at football. I always picked the people picked me last on the team at school. So
Hey, that's all right. It's still a great sport to watch. You don't have to be the best, you just have to enjoy it.
actually, one of my best friends is a football goalkeeper coach in fairly well known European football team.
Ah, that's amazing. Cool. Elon Musk or Oprah Winfrey?
Oprah,
Big Mac or Chicken McNuggets?
Big Mac.
Well, we're almost there. What is your superpower?
I don't know. Maybe people tend to trust me quite easily. So I'd say that's my superpower.
I would say your superpower 100% is trust and communication. So I think you've kind of built this legacy and it's shown through all the great things that you're doing. And I'd like to say that it's been a real pleasure and honor getting the opportunity to chat with you today and go through and learn a lot more about yourself and how you guys operate and all the great things that you've been doing and have done. So I want to thank you for being a rock star. And the way we like to end our show is that we like to give you the last word. Anything you want to share to investors, to startups, founders, etc. I turn it over to you, share, and please let us also know how people can get a hold of you.
So okay, now I have empty mind on sort of the sharing side, but I'm pretty easy to get the hold of. I mean, our contact details are at butterfly.dc. Everybody is available there. I'm easy to find from LinkedIn, and I try to kind of answer whatever contacts I do get, but of course there's a ton of sometimes coming, so don't give a guarantee, but relevant ones are for sure.
I love it. Juho, it's been a pleasure getting to chat with you today. Thank you very much for your time, and we look forward to chatting more in the future.
Likewise, hopefully see you at Slush or somewhere.